Hello and welcome. My name is Silvia Pavoni, economics editor of The Banker, and I'm joined by Jacques Beyssade, who is the Chief Risk Officer of Natixis. Jacques, this week the European lawmakers have reached an agreement with the European countries on the structure of the banking supervisor that is going to become operational hopefully by mid-2014. Do you think that the issues in Cyprus are going to push this process faster?
I think so. I think the situation in Cyprus can only be solved with a level of European intervention. And the ones who, at the end of the day, hold the keys of the solution in Europe are the ones who should call the shots in terms of supervision as well. So I think this is pushing towards more centralization at the European level of a number of things, including banking supervision.
And perhaps you think that we're going to have a supervisor, European supervisor, in place before the actual deadline? Would that be
I don't
possible?
think so. Usually these kind of things take more time than originally anticipated. So I don't think it will go faster than we say today, but it will certainly go faster than we thought it would be like 2-3 years ago.
Now, the banking supervisor is going to have a say on Europe's largest banks. Europe's largest financial center, however, London, is now going, and its lenders are now going to go under the remit of this new body. How do you think this is going to shape competition between lenders based in London and the ones based in other centers such as Paris or Frankfurt, for example?
I think it's not going to be perfect, but it's already an improvement. We are starting from a situation where we have local supervision. Global rules, the Basel rules, but that are applied very, very differently in different locations. There will be a level of Eurozone consolidation with one head regulator, and I think this is a very good thing. I think first it is legitimate that there is a level of European regulation rather than individual states, and second, it's going to create somewhat of a level playing field for banks within the Eurozone. So the Eurozone is not the entire world, I have to recognize that, but it's already better than individual countries. And I think it's very important that we have, beyond that, a more level playing field as well with the UK, but also with the United States and with banks in Asia that are growing very fast.
So you think that this is a natural process that perhaps is going to take place anyway in the future somehow?
I think it will take some time because you have individual interests that are at play, and the role of the US regulators, US government, US authorities is also to defend their own companies, their own banks, etc. So there is a level of difference of the interest in the different parties, which makes it more difficult as a movement. And when you have a crisis, somebody has to step forward. In our case, it is the European Central Bank. And as a follow-up of this stepping up and taking charge of the issues, you have changes in regulation. We would probably need furthering of global crisis to have more consolidation at the global level after the European stage.
Which is something that obviously nobody is hoping for, to have a developing of...
Yes, the fact is that progress sometimes comes as a result of a crisis. So you call for progress, you don't wish to have the crisis, but sometimes it's a necessary condition for things to move.
Okay, so we possibly are going to see a big silver lining at the end of this.
I think so. I think we should
European
really
crisis.
see it as a silver lining. I think you look at the European banks today, or indeed banks in other parts of the world as well, they are in much better shape than they were 5-10 years ago. So that's the silver lining after the crisis. It's a very costly exercise to improve the situation of the banks, but nevertheless, the result is better than the situation before.
And how do you anticipate the life of risk officers under the new European banking supervisor? Is it going to be easier? Is it going to be more complex? What's your view?
I think it will simplify to a certain extent that we have one rule of one book of rules for all of our European operations. That's going to make our life a little bit easier. That's probably going to make our interaction with the regulators a little bit more difficult at the beginning because we knew our local regulators. As a French bank, I know the French regulator quite well, and I will have to discover a little bit how the European regulator is going to work with us. So at the beginning, there's a little bit of adaptation that we'll have to play with. But at the end of the day, it will simplify our life within the Eurozone. And I think it's also very good that we have rules that apply to everybody, because it will foster common practices for risk officers in banks around the zone. So it will probably make our job a little bit more globalized or regionalized within Europe, rather than having very specific ways of exercising our businesses.
What about the impact on banks that also have an international presence outside of the Eurozone?
They will still have to cope with US regulators, with the UK regulator, with various regulators in Asia. So their life is not going to be totally simplified, but life is never totally simple anyway, especially for risk officers.
Very good. Well, thank you very much for your comments.
Thank you, Silvia.